Well, Google, right? Obviously, it's had a terrible few weeks. Much of that self-inflicted, and then the rest of it, the macros. But I mean, I still think that's an extraordinary business. And people were disappointed with the revenue growth. The revenue growth was still extraordinary, right? If you were to back out the cash, which every time I say do something with your cash pile, it's ridiculous. I think it's growth at a very reasonable price.
Talked about United Health for a long time. Look at that stock today. It had every opportunity to get bludgeoned, and it didn't. Down about 0.5%. Still at levels. Basically, went from 218 to 240, and we're right there now. So, I think the bullseye that's been on the back of these stocks is going to be off for quite some time. And I think the cream will rise to the top. So if you're looking for an opportunity, I think UNH is as good as it gets.
Yeah, so I have a pretty simple way of doing this. I don't like to be too early when you're trying to buy a dip like this. I'd want to avoid, like a Google you said is a self-inflicted thing that may take a quarter or so to work itself out. Look at two names that reported in the last month or so that had stellar numbers in the stocks gap. Look at Microsoft and look at Disney. And I look to the breakout levels where they just were. In Microsoft, that would be at 115, and at Disney, it'd be 120. And if you get weakness in the next week or two or whatever over a period of time, that's where I want to kind of go into those. Apple has a level, down at 170. I mean, you want to catch some of these breakouts. That's where they should have some prior support.
I would go to Apple, and I would say because they are such an obvious trade war victim here, it's one of the reasons why you have to assume that people have shot first before actually asking the proper questions. What we know about Apple is they will capital markets-wise support you as a shareholder, no matter what, for the next 3 years. There's no turning back from that, and I do think services revenue is meaningful. It doesn't need to be, but again, on a blended multiple at this point, Apple, I did like it 2 weeks ago. I like it more now, even though I don't like these headlines. And then AT&T, because again, you get into a domestic story. We're at a place where we're not worried about a trade war victim. Lower rates for a company that's got an avalanche. Well, maybe it's not an avalanche. I don't think it will be an avalanche of debt, but that's the criticism here. And finally, it's a 7% dividend yield at the time when rates are going lower. Not the reason to buy it, but interesting.